This is Aaron Levine, LG Insurance, with another episode of the And Insurance podcast. Today we have a great guest, Anthony Mauriello from My Tax Fella, originally out of Staten Island, but has offices in New Jersey, throughout New Jersey, in Bricktown, Red Bank, Farmingdale. Where else? That's it for
you.
today.
You hit him, man. Where's
the next office you're
Three
gonna
in
open
Jersey, wherever we plant our flag, man. It's a great, it's a good question. Where we turn up next?
Where do you turn up next? You know,
Yes,
sometimes
sir.
you got to stop commuting into Staten Island every day.
You know, it becomes less and less practical the more time I spend out here, and you'd be amazed that what do they say? Where your attention goes, your focus flow,
Right.
or what's that saying?
I don't know, but I got
the
you.
more I'm out here, the more traffic
Right.
seems to follow us. You know.
I remember visiting you in your office in Staten Island. I think I was there once, maybe twice, you know, early in our relationship. And
Yeah.
I think we started working together maybe 10 years ago.
At very least,
I would say.
Yeah.
I remember you pulled up to my office on Brighton Avenue, Nuno Teixeira.
Yes, Nuno. Shout out to Nuno.
Nuno's Cafe.
Yes, sir.
Nuno, you're in Orlando right now where it's warm. Come make some breakfast here in Jersey. But Nuno connected us.
Yes, he
way
did.
back then, and you pulled up. You had a 7 Series blacked out
Yes, I
windows
did,
back then.
man.
I'm like,
Yeah.
who the hell doesn't
Who is
want
this
a tax
guy?
guy from Staten Island with blacked out windows on a 7 Series? Like,
Yeah.
home run. This guy's going to save me a boatload of money. And then
Exactly. Named Tax Fella. But yeah, it goes by Tax Fella.
You know,
Yeah.
we can talk about that name stuff.
Yeah, we
you
could do
know,
that.
But, you know, we're not here to talk about your marketing, but it definitely works for you. So, what you started your business how long ago?
I've been in business over 20 years. Wow. 1999.
Okay.
Yeah. And it's funny because a client came in yesterday and same thing. Like, Anthony, how are the kids? They always ask.
Right.
And that's what came up. Hey, how long have I been coming to you? I came to you since you were at your old partnership. And when was that? And I had to look at the certificate on the wall. I'm like, 1999, man. It blows your mind, Aaron.
So you've been able to build a successful business, and people always love listening to good success stories. So I mentioned you have 4 offices now.
We have 6 offices.
Six
now.
offices now. See, I get my math wrong.
It's all right.
You've built up a staff. I think it was you plus 1 back in the day. You know, and now you have how many employees?
Well, you know what? There's attrition. So it was me and my wife Nada. She used to be dining room table. I do the returns. She'd photocopy them up. We grew to 20. We shrunk to 12.
Right.
Where somewhere around 12 to 16 is our comfort zone. You know, solid, sustainable.
Right.
You know, but with COVID wiped everybody out.
Right.
So it's a challenge now.
So your
right?
business, you focus on the tax side of things, but you've expanded that. I know you've gotten into helping people set up and connect with payroll companies. You run some of that out of your office with bookkeeping and other processes, right? Where's the expansion going to next? What are
To
you
take
working
us
on right
next.
now?
Yeah, it's a good question. So we just landed. Forever, I've been trying to, and you bring up payroll or employees. Forever, I'm trying to give this white glove service. Okay. So we've got a lot of small businesses, and there's a need for it because as I have staffing issues, they have staffing issues. And I didn't mean to point at you. I didn't mean to point at you, Aaron.
Actually, no. Right now, well, we're good today.
You're
While
solid.
I'm
Bite your
sitting here
tongue.
talking to this camera.
I'm knocking on wood for you.
We're good for right now. Who knows what text messages I have when we get done recording?
You know, and whether it was an employee doing it or the owner doing it, I'm realizing that just far too much time is spent on running the business, the day-to-day minutia of the checkbook. A lot of people use QuickBooks nowadays, but they're really not using it for the tool that it can and should be.
Sure.
So we identified this as a need, and for years I've been searching and trying to huddle my team to say, guys, I want a next level. Quite honestly, when we do bookkeeping for a client, they don't see the value of it because it's a byproduct of here's my last month's bank statements, or in some instances, here's my last year's all at once.
It's not what you can do for me tomorrow. It's not a revenue generating activity.
And at that point, the year is over, the month is over. There's little proactive planning I can do. So I'm a Polaroid picture. I'm recreating your history, and we're going to generate your tax return based on that. I wanted to turn that around, and I want to get in real time with people and say, hey, listen, Aaron, what are your goals for your business? What are your short-term, long-term? Do you know what your budget looks like? Do you know where your profitability margins are? To really dive deep into those I say small businesses because it's what we're passionate about, but really any size business, you know.
So it's almost like a CFO kind of outsourced service.
Without a doubt.
You want to tell these small
Exactly
business
right.
owners that they spend too much money and stop spending so much.
Without a doubt. Exactly. and identify those areas.
That's why I'm not hiring you for that.
Thank you much. I don't want anybody to feel. But that's exactly what we're looking to do here. Right. And so through a franchise company called Ledgers, we finally found it. And awesome. you cut me at 4, but we're up to 6 offices. The 6th one is in Red Bank, and that's going to be our flagship location. Okay. And we're going to run our Ledgers operation out of that. And what it is just what you said. It's an outsourced CFO or a whole entire outsourced accounting system where we come in and we'll do as much or as little as your accounts receivables, payables, budgeting. What that does is it puts the cart back behind the horse and truly allows me to steer where you are, help you with that budget. Mm-hmm. We have a good friend of mine has a barbecue joint out in the Peddler's Village. Okay. And he's like, hey, I'm watching these Restaurant Impossible, Bar Impossible. I don't know my margins. I don't know my and we're really able to go in there and
margin,
dive.
Shrinkage, everything.
Absolutely. Yeah. Spoilage, shrinkage, a ton of different variables.
Your gas bills going back and forth to Restaurant Depot or the service without providers.
Exactly. And prior to this opportunity with the franchise, I simply couldn't staff myself enough to give that level of service to the clients. Mm-hmm. And now I'm really happy that we can. And on a monthly basis or even weekly, bi-weekly, quarterly, whatever the frequency demands, we're truly able to help that client. Right. And in his instance, we were able to identify areas where right off the bat, it doesn't sound like a lot, or maybe it does, $300 or $400 a month, secure it up for him. Swapping out his purveyors of the meats and the cheeses and things like that. Some areas of shrinkage, not overwhelming. Sometimes it's unintentional. In our industry, theft of time is theft. So if my staff is back there on Facebook or Instagram tooling around right now, it's theft. So we'll be able to say, listen, Aaron, you've got 16 employees generating. What's the per head profitability?
Yeah, we have benchmarks. There's different revenue benchmarks per employee that we're supposed to
track those?
Doing. I have the ability to track those,
but you don't have the time to track those.
I'm also very comfortable with my staff. Margaret's been with me for 10 years now.
She's aces. She helps me.
Josh has been with me for 8 years. I can't believe some of these. My staff has been with me for so long. I'm blessed for that. I think of course it's a great thing.
I think it speaks to you as a gentleman, of how you treat them. They wouldn't stay if they were not that feeling wasn't mutual.
Offering different opportunities, business as a service, I think is great. And that's one thing we've been trying to do a little bit more of, is doing more risk management as a service as opposed to just selling insurance. I don't want to sell insurance. I want people to buy insurance products from me.
Exactly.
I want to be able to speak to people about their total cost of risk, so to speak, go in and find ways for them to reduce their overall costs, not just their insurance costs.
Exactly.
And use insurance policies as a way for me to earn money by the commission that's on those policies, right? You're going to pay me
value generation
by purchasing the insurance, but I'm going to help you by making sure you have the right program in place.
Without a doubt.
Plus all of your other issues are resolved to prevent claims, slip and falls, employees getting injured on the job, regardless of what business they're in. So we're focusing a lot more on that, especially in this economic times we're in right now, where prices of insurance are going through the roof, just like everything else. Yep. Social inflation is the term we use on the insurance side, right? For one of the reasons why cost of insurance is going up. But then you look at wildfires, floods, earthquakes, tornadoes, Russia-Ukraine war. Right. All these factors are affecting the global insurance market, and it's making our car insurance and our home insurance and our small business insurance go through the roof.
And that's something that I'm sure I want to be seen as an investment, not an expense. Right. So in balance sheet or profit and loss, an expense deducts from your profit. Sure. An asset adds to the overall value of your business. Okay. I want to be considered that asset. So I don't want to do that, provide that service for people and be costing them money, like yourself. So we're here to identify those areas, shore them up. Because look, let's face it, I had a kid yesterday, almost the same relationship as you and I have, been with me 10 years. He's got a ton of shoe stores on 86th Street. Okay. Doing all his books himself, but he's running QuickBooks as though it was literally like on the back of a postcard. Everything is commingled
and of everything and hand you the shoebox at the end of the year. Do people still do that?
Well, not as much, but
they used
we
to.
see it exactly. And I'm saying, for what you think the monthly service fee would be for us to come in here and do that. Number one, you're probably spending more on that per week on an employee to do it.
Right.
If you're not even hiring the employee because you think it's too much and you'll just do it yourself, number one, it's inefficient. Mm-hmm. There are areas that you're wasting money. You're spending your time. Your time should be getting new locations. Right. So similar. We want to identify these where penny-wise, dollar-foolish.
Sure.
And I think everybody's guilty of that, especially in today's day.
We're all guilty of that. We want to save a buck, but at the same time, we should be focused on what we're good at. This is E-Myth 101. Focus on those tasks that are going to generate you a profit, and then outsource everything else.
Exactly right.
There's somebody that's better at everything else that I do, except for what I do.
Exactly.
Right. Whether I'm hiring an employee to do it or I'm hiring another firm to outsource it, whether it's technology, bookkeeping, social media, marketing. We're in a studio right now, recording a podcast.
Right.
I'm not doing it in the office. We're not doing this via Zoom.
Exactly
We're
right.
using Rec Productions as our professional, as the outsourced firm to help us create good content that's visually appealing and has good audio to go with it. I hope all the audio is
quality. Exactly right. Exactly. That deep baritone, but laugh of yours, man. Of course, test it out. Test it out.
Get my radio voice.
Exactly. And there's also something we were talking about: our family and vacations and the kids and skiing and mocking your beard. But there's an opportunity cost that goes along with everything also. So even in my friend's instance, for him to say, you know what, it's no big deal, I'll do it on a Saturday. Like, dude, even if you think it doesn't cost you anything, it's time away from your family. Right. And that, to me, is a premium.
Listen, I don't cut my lawn at home.
Exactly right. I don't change my oil.
For that, I should start cutting the lawn at home so I can get away from the family a little bit more. But,
Gets you a little breath of fresh air.
I don't want to do it. I'd rather be watching golf, playing golf, out doing something with the kids.
And it's just leveraging the only one asset that is we all are limited to, which is 24 hours a day.
Right.
And that's no matter how much, no matter if you're Oprah Winfrey, no matter who you are, we all have the same 24 hours a day.
Right.
And that's where I see, whether it's our service or an employee, you are multiplying your hours by hiring somebody to do something.
Right.
So now all of a sudden I have 2 employees. I picked up an extra 48 hours and I'm forever drilling into them. Guys, there's 5 of us here. 8 hours a day is 40 hours. That's 1 full work week.
Right.
That's what I expect done by the end of today.
It's a good way to look at it.
And it brings it all to light to say, wow, it's a system that works, man.
Taking this business conversation aside, we've got to dive into, because it is tax season, right? We're shooting this on March 7th, March 8th, so we've got a month and 10 days to go before
we've got 7 days for business returns.
7 days for business returns. This won't be live before the business returns, so anybody looking for the business advice, your SOL, unless you file an extension. But so let's talk about it. On the business front, one of the hot topics last year was employee retention credits.
Correct.
I think that's still a hot topic.
Still is.
Are people business owners aren't aware of a lot of this stuff?
Many are not. You'd be amazed. Okay. And I think everybody is, it's just white noise at this point.
Right.
Which again, when you've got a professional looking out for you, we're going to bring that to your attention. Hey, last year was the PPP.
Right.
Whatever round they were up to. On the individual side, the economic, the disaster loans, or the advanced child tax credits.
Okay.
So absolutely, those employee retention credits are still there. They're available. And whether people know about it or not, it's our job to bring it to the forefront.
Right.
And
so I got in the mail a check for the advanced child care tax credit. I know I don't qualify for it, but I got the money.
Yeah.
Do I have to pay it back?
On the return, on the return, it's time to true up. Yeah. So
am I going to be charged interest and a penalty?
No interest,
okay.
No penalties. Right, yeah, but and I tell you,
it's a free loan. I'll take it.
It's a free loan. It's a free loan. They made such a mess of our tax system, and I think in the window that I see, it started really with Obamacare when they started giving you advanced premium, the credits for having insurance. They give you a credit on your tax return.
Right.
So that credit on your return prepaid that month's insurance premium.
Okay.
Later on, if you earn too much income and were not entitled to it,
Right.
pay it back on the tax return. That began the first domino that fell of pre-issuing an item that used to appear only on a tax return to the taxpayers through the course of the year.
Okay.
Last year it was unemployment. Somewhere around February or March, the IRS said, hey, we're going to make, to further help the economy, we're going to make the first $10,200 of unemployment tax-free.
Okay.
Problem was,
sounds good to
maybe
me.
A few million people already filed their tax return, paying tax on 100% of their insurance, unemployment. Phones are ringing off the hook. Got to amend my return. Got to amend my return. IRS is telling us as a professional, don't amend any returns. Right. We got it. We're going to adjust it on our end. Fast forward 9 months. Famous last words, Aaron. You know. So
the IRS said.
The IRS exactly. The check is in the mail.
Death and taxes. That's all we got.
Correct. So it's been a challenge in that a lot of these credits, a lot of these programs, there's nothing free. You know, it's an advance of what's taken on the return to be reconciled when we file that tax return. Pendulum swings both ways. Right. Let's say last year you had a stellar year, you got a bonus or whatever, your employer retained you with his PPP money, bonused you out or whatever. This year you're not so lucky. If you didn't qualify for it last year and you do this year, we true it up and we give it to you on the tax return.
Got it.
Curveball after curveball though, man, because if we don't hit that curveball, we're swing and a miss. Right. Meaning, if you say, Anthony, yeah, I got the child tax credit. I think it was, I got like 3 payments of $300. If you really got 5 and we put that you got 3, it's going to hold up your refund. It's going to be delayed because IRS goes, wait, there's a mismatch here.
I mean, but why aren't they sending me a 1099 for that?
They have. So they've given form letters. Okay. Now the next curveball is the husband and the wife, but each taxpayer gets a letter.
Okay.
And each of you should have received. Yeah. So each of you should have received the $1,400 in this instance.
Right.
Stimulus payment.
Okay.
Sometimes people come in with one. Did your husband get it? I don't know. Let me call him. Calling him. Let me look through my phone and check my bank. So you know, you're sitting there just kind of twiddling your thumbs. Right. It's been a very tough 2 to 3 tax seasons for that reason. You know,
and it's not going to get easier.
It's definitely not. You know.
So going into it, so obviously that's going to be huge for anybody that's been on unemployment or received, you know, your child care tax credit in advance, whether you qualify for it or not. You know, there's a lot of moving parts that TurboTax just isn't going to be able to pick up on your behalf.
Exactly.
Right. Outsourcing to a professional is always key. What are some of the other things? You know, we've been working at home for 2 years.
Correct.
Is there any additional? You know, at one point, home office was taken off or put back on.
Right.
Has home office come back then?
Yes and no. Yes and no. You know, depending upon
Sound like a lawyer. Yes, no, maybe.
You're not going to paint me into a corner, Aaron. Depending on your job title, your qualification, there is still a up to a $1,500 work from home as a self-employed person. If your job mandates you to work from home, you're required to have internet, you're required to have cell phone, Zoom, high speed. Unfortunately, none of that is an itemized deduction as it's currently written. Correct.
Should be.
That was one of the things Trump did away with when we used to itemize our job-related expenses. Okay. Those would fall under the genre of an itemized deduction.
Right, okay.
And although it is the circumstance and it is the pandemic and I have to work from home and your job is requiring you to have that, there's just no line item. Now, that's the federal. New York State still does allow itemized deductions.
Okay.
So whereas a lot of, even the cops, the firemen, they come in, my union dues are this, my small hand tools. IRS doesn't bat an eye.
Right.
New York State will still give you credit. Right. So we go in and we try to capitalize on all that.
Okay. So what else do we need to know?
Swag.
We got the vodka in the background. We got the cups on the table.
I thought there was vodka in this.
We're good to go. You know.
Excuse me.
You're a whiskey guy.
Yes, sir. All right. Good call. Good call. What else do you need to know, man? Proactively, you mentioned businesses earlier.
Right.
We always like to look at that business. And again, shameless plug. When we are your outsourced accounting office and team and running that back office for you, I got my finger on your pulse all year. We're going to identify areas such as SEP accounts, profit sharing accounts, certain insurance vehicles and vessels that'll allow you not only a tax deduction, like I said earlier, this is an expense on your profit and loss,
right?
But it's an asset to you as an individual. And I mean, we could dive deep into insurances and who's the beneficiary and things like that and their deductibility. But if we truly have our finger on your pulse throughout the course of the year, proactively, we've got 12 months to plan. Now, let's say we didn't have that opportunity last year. We trip over the 12/31 deadline.
Right.
There are certain planning strategies that you could take up until the due date of your tax return, such as an IRA, a profit sharing plan, a SEP, that you can still deduct and have credited and count towards last year's tax return.
Right. So there's also some new retirement plan requirements in the state of New Jersey, right? With if you have over 25 employees, you're now required to have a retirement plan in place for your employees. So we've been talking on our side, there's a requirement called an ERISA bond that we have to issue. So we've been marketing towards that, quietly on the down low to help businesses get that situated. But how does that work, right? So I don't know if that's a 2022 or 2023 thing, the retirement account requirement. But on the taxes, that benefits the business owner in some way, shape, or form. It benefits the business to offer a retirement plan.
Correct. And similar, so if you've got a profit sharing plan, you've got a 401k, depending on the type of plan that you're investing in, sure, any kind of salary deferral is coming directly off of your employee's W-2 going into this plan tax-free. If you as a company are matching, if you're giving a profit share or percentage, that is coming off your profit. So again, we might want to analyze that to say, look, you could pay Uncle Sam $50, or you could put money aside on the benefit of your employee, even if it cost you $60,
and not have to pay payroll tax on it.
And there's some goodwill. It makes the employee feel valued and honored and seen. It's giving you the tax deduction.
Right.
Net, it might cost you a little bit more because instead of $50 in tax, you're going to pay $30, but now you also have to contribute. But I think for that extra little dollar amount, you're getting so much more bang for that buck.
You're getting value, putting value out there for your employees. Without a doubt. There's a reason we offer a simple IRA to our employees with a match plus full health benefits, that I'm currently paying 100% of. As they continue to rise, that may have to change. But, I think it's important to take care of our employees, and that's why they've been with us for so long.
How do you think that would be perceived? If it's got to change, how would you approach that? How would you go about that? Do you think
we're in trouble if I have to?
Is that right? Yeah.
Because then we're not making enough money to offset a little, a 10% increase on medical insurance.
And I think exactly right. And I think employees, depending on how involved they are, they get it.
It's part of their pay package. It's part of their plan. It's part of their total, their gross. Their
overall
gross numbers, whatever it works out to be at the end of the year, it all adds up.
Right.
So,
that's right.
A lot of good benefits for employees. Outsource everything, I think, is the moral of the story. Talk to Anthony Mauriello and my tax fella and the new Ledger's business about being your partner on a year-round basis. It's only going to benefit you come tax time. It's going to benefit you year-round, knowing what your cash flow and your profit and your margins look like. It's not just so he can tell you stop spending money. It's to make sure that we find where you're losing that money so that you can
recapture it, reclaim it.
And spend more and make everything better. So Anthony, I appreciate you
anytime, brother.
Today. I know you got to get back to the office.
Yes, sir.
I'll
turned into a pumpkin. Thank you much.